Hello everyone, welcome back. I'm Lenny, and this week's module will be focused on opening a savings account at a U.S. bank or credit union and finding ways to save money. You may watch the video as often as you like. You should watch the video before our in-class sessions. This will help you to prepare for class. By participating in this class, you are taking an important first step to building a better financial future for you and your family. Before we begin learning something new, let's review what we discussed in class: opening and maintaining a checking account. In class, we discussed 4 primary benefits of checking accounts: convenience, cost, better money management, and safety. Checking accounts are convenient because they provide you with quick and easy access to your money. Banks and credit unions are usually less expensive than other services, like check cashing services or buying money orders. Checking accounts offer you better money management because you can manage your money if you regularly record or monitor your transactions. And of course, safety. It is safer to use checks and debit cards than to carry large amounts of cash. Additionally, you can limit your financial loss if you report lost or stolen checks or debit cards to your bank as soon as possible. We also discussed important words that you will hear at the bank or credit union: deposits, balance, withdrawal. Do you remember what each of these words mean? A deposit is money you add to your account. When you add money to your account, you must fill out a deposit slip. A deposit slip tells the bank how much money you are adding to your account. The balance is the amount of money you have in your bank account. When you make a withdrawal, you take money out of your bank account. Before opening a checking account at a bank or credit union, there are several questions you should ask. When deciding where to open a savings account, many of the same questions should be asked of the bank or credit union. Let's begin today's module discussing savings accounts and how to save money. Saving money is an important part of building your financial future. When you get a paycheck, tax refund, cash gift, or other money, you should put some of that money in a savings account. Making regular payments to yourself, even in small amounts, can add up over time. The amount your money grows depends on the interest earned and the amount of time you leave the money in the account. One of the most important aspects of choosing a savings account is the interest rate. Interest is the amount of money banks or other financial institutions pay you for keeping money on deposit with them. It is always expressed as a percentage. It is calculated based on the amount of money in your account. For example, Linda has been saving $30 every month for 2 years. Each month, she places the $30 in a jar in her closet. After 2 years, she has $720. Her friend tells her that she should consider putting her money in a bank or credit union because it will be safer and Linda can make interest on her money. Her friend reminds her that her closet will not pay her interest or protect her money. The bank will pay interest on your savings accounts. If Linda maintains a balance of $720 in a savings account for 1 year and the bank pays 0.5% interest on the savings account, she will have $723.60 at the end of the year. We reach this number because 720 plus $3.60 of interest equals $723.60. Remember, the more money you have in the bank, the more money you can earn in interest. There are several questions you should ask before you open a savings account. What is the minimum balance to open a savings account? What are the monthly fees to maintain a savings account? What is the interest rate for a savings account? How can I have the fees waived? How many withdrawals can I make each month? In order to open a savings account, you will need the following. You will need a minimum amount of money to open a savings account. At most banks, the minimum amount is $25, but with this low amount, you will be charged a monthly fee of at least $4. You can avoid the monthly fee by having $300 or more every day in your savings account. You will also need 2 forms of ID, just like when you opened a checking account. Here are some tips for you to consider when opening a savings account. All money in a savings account will grow because of interest. Shop around for the best interest rate you can find. In most cases, you cannot withdraw money from your savings account more than a few times a month, or you may be charged. Saving money can help you build assets. Well, everyone wants to save money, but how do you do it? Anyone who has tried to save knows that setting money aside isn't as easy as it sounds. First, you have to make the decision to save. Then you have to find the money to save. There are basically only 2 ways to find money to save. You can decrease spending on 1 or more items and then put that money not spent into savings. The easiest way to find a chunk of money to save is to cut costs. Consider your needs versus your wants. Think about the items you purchase on a regular basis. These add up. Where can you save? Can you cut back on daily expenses like coffee, candy, soda, or cigarettes? Do you have a service that you do not really need, like cable television? Can you carpool to use less gas, or combine all your errands? Can you change your phone plan? You should also consider using direct deposit or automatic transfer to savings. When you get paid, put a portion in savings through direct deposit or automatic transfer. If you have a checking account, you may sign up to have money moved into your savings account every month. What you do not see, you do not miss. For example, if your weekly paycheck is $245 and it is directly deposited into your checking account, you can have $10 automatically transferred into your savings account. Once you set this system up, you might forget about that $10, but by the year's end, you will have over $500 in savings. Other ways to save money are paying your bills on time. This saves the added expense of late fees, extra finance charges, disconnection fees for utilities like phone or electricity, fees to reestablish connection if your service is disconnected, the cost of eviction, or repossession. You should consider opening a checking account at a bank or credit union instead of using check cashing stores. This will save you money. In our Introduction to Banking in the U.S. module, you were introduced to Candace and Camilla. Candace did not have a bank account. She used a check cashing store to cash her checks. Candace cashed 4 checks a month and was charged $15 each time. That means she paid $60 a month. 15 times 4 equals 60, or $720 a year. 60 times 12 equals $720. In addition, if she bought money orders to pay 5 monthly bills and they cost $1.20 each, she would pay $72 per year. 6 times 12 equals 72. The total cost to Candace to use a check cashing service was $792 per year. $720 plus 72 equals $792. Camilla worked with Candace. Camilla had a checking account. The bank charged her a monthly fee of $5, which included 8 free checks per month and free use of the bank's ATM. Camilla also ordered a box of 100 checks, which cost her $18. The total annual cost for the checking account was $78. $5 times 12 equals $60, plus 18 equals $78. In 1 year, the cost savings for using a checking account instead of a check cashing store was $714. $792 minus 78 equals $714. Here are some other ideas to save money. If you get a raise or bonus from your employer, put some money into a savings account. Keep making the monthly payments to yourself once you have paid off a loan. You can save or invest the money for your future goals. An example of this, you may be paying your resettlement loan. Once you complete the payment, continue to make those payments into your savings account. Another idea is to save at least part of any cash gift you receive. You should always pay off high-interest credit cards or other loans as soon as you can. Save your change at the end of every day and deposit it weekly or monthly. When you get your tax refund, save as much as possible. Choose to receive your tax refund via direct deposit. You can split it between two different accounts, your checking and your savings account. Now let's look at how to make a deposit at the credit union or bank. Rena goes to the credit union to make a deposit into her savings account. She has 3 checks and $65 in cash. Her checks are for $32.58, $29.18, and $61.45. These, along with her cash, equal $188.21. In the bank, she fills out her savings account deposit slip. Before our next class, I want you to think of ways that you can save money. Do you have expenses that you can cut back on? Are you getting a tax refund? How are you saving money now? We will talk about all this in class. See you next week.